Well, moving along, it's time to turn our attention over to the markets, and joining us in studio today to discuss trends impacting trade, Heather Ramsey with the ARC Group. Thanks for joining us.
Thanks for having me.
Okay, well, let's set the stage on price action so far this month. Just set the scene for us.
It's been wild is a really great way to describe what's happened. If you look at October 1 to where we are this week here, we've seen about $1 range high to low on soybeans, which is phenomenal until you look at where we currently are. We're sitting just under $10 futures, so we're kind of mid-range here. We had some opportunities early on that really allowed early harvest bean movement to kind of come across the scales at or around $10 cash, pretty much everywhere in the state. And I think that was a really great opportunity. If you were paying attention, had opportunity to market that, kind of knew what you had in the field, taking advantage of that was a great move. On the corn side of things, highs near that 435 mark to lows around 399, so just under $4 futures at harvest has been a thing. And that has allowed in the first probably 10 days of the month, that allowed us to really see some $4 plus cash prices across the state for kind of harvest overrun. Now, you had to do some planning to know if that was overrun we needed to be pricing or not. But I think if you put the work in to take advantage of that, we did have an opportunity early this month. Again, with where we're sitting right now, kind of back to in the middle of that range, that 35-cent range that we've seen. So not the end of the world where we sit right now, but definitely need to keep our eyes on that movement. We're very range bound. So if we can get back to the top ends of those ranges, it's a good time to take action, clean up some extra bushels, generate some cash for the farm.
We'll talk more about basis coming up in just a couple minutes, but corn exports continue to be very strong, something that's kind of been a headline. Share what you see.
Yeah, so when you look at export pace, like actual shipments out of the country, we're ahead of schedule. We're ahead of this time last year, and I like to remind people that last year we were begging to be ahead of the previous year, and we were. So we've now piggybacked 2 years in a row where export pace has really picked up on corn, what we're physically moving, as well as in the actual sales that we have on. So we're definitely on pace to meet those USDA targets. I know it's early in the crop year, but if we can continue to see the volume move through in October and into November that we've seen so far, as far as sales and the actual shipping pace, that would warrant an increase to corn exports on the balance sheet, which is huge news, and also something I don't think should be surprising to a lot of people, because the low prices definitely breed this pickup in demand. So it's been great to see that. They're going to, most of these exports and the increases are going to a very, very reliable partner, and that is Mexico to the south. So we'd love to see this relationship continue to grow and for them to continue to buy U.S. corn. Corn's kind of the bright story on that export story, though. There's not a lot to talk about in the other two principal crops right now, unfortunately, and some of that's exacerbated by the time of year and the specific year that it is. So yeah.
Well, let's move a little closer to home. Cash basis reflecting large crops and space issues. When you look at the local picture, what does that look like?
Depends on what part of the state we're in, on who's had a train to free up space and who hasn't right now. But we are seeing space issues pretty much everywhere. There's been closures on harvest hours shortening up, or having actual full days being closed because we're short on space for both corn and beans at this point. I think when you look at the last 3 years of harvest in Nebraska, these are the best numbers I've seen widespread. Now, there's been other pockets here and there maybe, but to have a widespread production this good, this surpasses the last 2 crop years for sure. And so it's not that this is way out of the norm. We got kind of out of habit on how to handle a decent sized crop. So we're seeing some struggles. That's exacerbated by some of the rail issues we had early on in harvest, some of the port closures, those kinds of things. I think we're working through that, though. We're starting to see that off the farm into the processor, into the elevator, slow down just a smidge. So we're hitting the tail end of harvest, which is helpful. And we're able to kind of clean out space and get ahead of it again. So I don't know that we'll have a whole lot of problems going forward, but definitely the last week and a half has been a little bit of a challenge in certain parts of the state.
Well, as harvest rounds out across the state, we're less than 2 weeks away from the election. So real quick, want to get your thoughts. Is that having an impact on the ag markets?
Yes, unfortunately, the geopolitical environment is definitely affecting the markets. It generally does. Generally just not in maybe this significant or as close to home fashion. We see a lot of things with, overseas politics, but here we are, like you said, just a couple weeks out from the election. Depending on what the polls say and who's in the lead at that time kind of dictates which way the market is going. There's one side of the equation that's super friendly to biofuels. There's another side of the equation that's kind of hard-nosed on tariffs maybe, and that's not supportive to commodities. So depending on the week, depending on the headlines and the polls, that really is kind of pushing money one direction or the other.